And the overall goal of all of that is to support market functioning. This is the corporate credit facility, and this is the secondary market part of it. So we want to support market functioning because when markets are working, companies can borrow, people can borrow. Companies aren't feeling tons of financial stress, and they're less likely to take cost-cutting measures and things like that. So I would say a couple things. First, buying cash bonds is going to form the primary mode of support over time by which we support market function. Over time, we'll gradually move away from ETFs, not suddenly at all, and we'll move more to buying bonds. It's a better tool ultimately for supporting liquidity and market function. At the current moment, markets are functioning pretty well, so our purchases will be at the bottom end of the range that we've written down. And as those markets continue to normalize, our purchases would decline.
Chair Powell, are you planning to hold all of these bonds to maturity?
Ultimately, we are generally a hold to maturity entity. Okay. It may be that we sell some back into the secondary market down the road, but ultimately we're a buy and hold buyer.
Chairman Powell, as you know, on April 22nd, in response to a letter from Senator Crapo, the Federal Reserve Vice Chair for Supervision, Randall Quarles, requested that Congress consider modifying Section 171 of the Dodd-Frank Act, otherwise known to all of us as the Collins Amendment. Do you agree with Vice Chair Quarles that Congress should revisit the Collins Amendment to ensure that banks are able to adequately respond to increased credit demands?
Yes. So what we're looking for in a lot of these things we're doing is temporary relief during the pandemic so that the banks can use their balance sheet to support their household and business customers. It's no more complicated than that. So as they've taken in more deposits and as they've engaged in forbearance on things like credit card balances and things like that, their balance sheets grow. So they've been supporting their customers and borrowers, and this is simply a matter of allowing them to do that. It would be a temporary measure.
So you are in favor of at least a temporary measure to modify Section 171 and 171 of the Collins Amendment to allow them to handle this increased credit demands?
Yes, and we'll be happy to work with you on the details of that.
That would be terrific. I thank you so much.